You're watching Don Gilded, where we don't chase the hype, we track the metal. Let's talk gold. Something strange is happening behind the scenes. In the last 18 months, central banks around the world have been buying gold at a pace we haven't seen in over 50 years. Quietly, relentlessly, and without much explanation. But why? Why would countries that print money suddenly start stockpiling gold like it's 1971 again? Are they preparing for something? Let's break it down. First off, let's look at the numbers. According to the World Gold Council, central banks purchased over 1,000 metric tons of gold in 2023 alone. That's more than double the amount bought in 2022. And that wasn't a slow climb. That was a vertical jump. To put it in perspective, 2023 was the highest year of central bank gold buying since they started tracking the data. And guess what? Countries like China, Russia, India, Turkey, Egypt, and even Poland are all hoarding gold like it's going out of style. Some of them are buying gold every single month, without fail. So, why? Let's start with the obvious. Gold is stability. In a world where currencies are getting inflated, banks are collapsing, and debt ceilings are a joke, gold is the one asset that doesn't rely on trust. It doesn't need a CEO, it doesn't need a government signature, and it doesn't need to be printed. It just is. Gold has no counterparty risk. It can't be hacked. And it's accepted everywhere. Now imagine you're a country like Turkey, where inflation hit over 60% in recent years. Or you're Russia, cut off from the dollar system. What's your backup plan? Gold. But this isn't just about inflation anymore. It's also about de-dollarization. Countries are slowly reducing their reliance on the US dollar, and gold is their exit ramp. Right now, over 60% of global reserves are still held in dollars. But that number has been shrinking, and the more geopolitical tension we see, whether it's in Ukraine, Taiwan, or trade wars, the faster that shift is happening. China, for example, has been quietly reducing its US Treasury holdings and increasing its gold reserves instead. Same with Russia. And the craziest part? Some of these gold purchases are off the books, meaning they don't show up right away in public data. That's intentional. So again, what are they preparing for? Let's zoom out. Historically, when central banks load up on gold, it's a signal that trust in the global financial system is wearing thin. The last time we saw this kind of buying was during the Cold War and the collapse of Bretton Woods, when the world moved off the gold standard and currencies were left floating in uncertainty. But gold accumulation didn't stop there. After the 2008 financial crisis, central banks once again began rethinking their reserve strategies. Countries like China and India started slowly but steadily adding gold to their reserves. The Eurozone crisis further reinforced the idea that fiat currencies are vulnerable to shocks, defaults, and political manipulation. For nations outside the West, this period exposed how heavily the global system leaned on the US dollar and how dangerous that reliance could be. We're seeing echoes of that now, except instead of moving off gold, the world might be moving back toward it. But in a new form, not necessarily as money in your wallet, but as real value behind the scenes. Central banks don't buy gold because they think it's pretty. They buy it because it's insurance. Insurance against currency collapse, against inflation, against the dollar losing its dominance. Now let's talk about the supply. Gold mining output has been nearly flat for the last 5 years. The easy gold has already been dug up. What's left takes more time, more money, and more risk to get. Major gold-producing nations like South Africa, Peru, and even China are seeing declining production due to aging mines, labor disputes, stricter environmental regulations, and fewer new discoveries. Despite increased investment in exploration, the average time it takes to go from discovery to production is now over 10 years. That means even if we find more gold today, it won't hit the market until the 2030s. Meanwhile, demand is soaring. Not just from banks, but also from investors, ETFs, and even retail buyers. You know what happens when supply stays flat and demand surges? Prices rise. That's exactly what's happening. In March 2025, gold broke through $3,100 per ounce. setting an all-time high. And analysts at Goldman Sachs and Bank of America are already calling for $3,300 to $3,500 per ounce by year's end. That's not a bubble. That's pressure. Now here's where it gets a little weird. Some of the countries buying gold the fastest are the same ones criticizing the US financial system. Let's take China, for instance. Over the last decade, they've launched multiple initiatives to reduce their dependence on the US dollar, from the Belt and Road Initiative to the creation of a yuan-based oil trading platform. Simultaneously, they've been accumulating massive gold reserves, much of it sourced from domestic mines. Then there's Russia, sanctioned, isolated, and increasingly disconnected from Western financial systems. Russia has aggressively moved to backstop its ruble with gold and reduce dollar exposure. Some analysts believe Russia's endgame could be a gold-backed digital currency designed for international trade within the BRICS network. Turkey has also been stacking gold while its currency continues to struggle. In fact, Turkish citizens are turning to gold themselves, even burying it in backyards, because they don't trust the lira. It's almost like they're preparing for Plan B. Think about it. If you were running a country and saw the global order shifting, wouldn't you want something physical, permanent, and globally valuable? Gold is that bet. It's not a conspiracy theory. It's a central bank strategy. But here's the kicker. They're not telling the public why they're doing it. There's no press conference, no detailed strategy, just quiet accumulation. And that silence? That's louder than any words. So what does this mean for you? Well, when central banks start hoarding gold, it's not because they're optimistic. It usually means they're hedging against something. And when the biggest financial players in the world start moving billions into one asset, you might want to ask yourself, what do they know that I don't? The average investor waits until gold is in the news. Central banks don't. They buy quietly, consistently, and early. You're not too late. You're just in time to pay attention. And look around. The signs are everywhere. Gold ETFs are seeing massive inflows. Physical bullion dealers are reporting low inventory and delayed shipping. Social media platforms are buzzing with short videos of people comparing gold coins to their groceries, showing how quickly the value of paper money is fading. Gold isn't just a metal anymore. It's becoming a signal of caution, a signal of change. To recap, central banks are buying gold at the fastest pace since the 1960s. Inflation, de-dollarization, and global tension are the key drivers. Gold is being used as insurance, quietly but aggressively. Supply is limited. Demand is growing. Prices are rising, and likely not stopping anytime soon. So if you're watching gold break records and wondering if it's a bubble, just remember, central banks aren't betting on bubbles. They're betting on survival, and they're doing it with gold. If this opened your eyes even a little bit, hit that like button. Subscribe to Don Gilded for more weekly gold updates, market breakdowns, and deep dives into the world of real value. Because here, we don't chase the hype. We track the metal.